Hello everybody, how you doing? This is Jeremy, and here we are with today's edition of FXIFY Pulse. This is the show where we help you trade smarter. Today is Thursday, August the 20th, and before we get started, let's take a moment and read through this risk disclaimer. All right, everybody, how you doing today? My name is Jeremy, and welcome here to FXIFY Pulse. Glad to have you here with us today. Quite the movements yesterday in the markets. So we'll go through the main markets within the show. We'll take a look at gold, silver, U.S. equities, Nasdaq, S&P 500, then also take a look at some FX markets as well, and also oil. Oil's been moving, pretty much, all the markets. If you take a look at what we talked on Tuesday and then also last Thursday, all the markets have been behaving as expected. The news that came out yesterday about this time of the U.S. Treasury buying some long-dated bonds, some older, older long-dated bonds, has provided some liquidity in the markets. Of course, gold, silver, Bitcoin, those markets got juiced higher on the back or on the heels of more liquidity being added, thinking that those prices would get bid up. So we'll take a look at those patterns. And I do think that there is more upside to come. Don't know that it's all going to happen within a straight line, but an important level was reached in gold yesterday. And I think that the pattern is still incomplete to the upside, but I think any dip that we're looking at in gold is an opportunity, to reestablish to the long side. S&P 500 here. This is the chart we're taking a look at. Also Nasdaq. These were the arrows I had drawn on Tuesday, and that we were looking for a partial retracement higher. We got it. It happened pretty quick, and then now we're working ourselves lower. We're down here to new lows, almost down here to the green box. So the good news is that although this sell-off for the past couple of days or for the past week, has been, relatively sharp, there's a little more of the sell-off to come, but it appears that we are reaching the end of the sell-off. So I want to start off here with the S&P 500 because, in essence, if you look at the show that we did last Tuesday, a couple days ago, this was the pattern that we were looking at, and I was looking for prices to eventually work itself down here into the green box. So I am looking for lower lows to come. Now, with that being said, there is an opportunity that we could maybe position ourselves to the short side, pick up a little bit along the way. This is just a simple little opening range breakout type of strategy. This is where, in essence, what we do is we mark off the first 30 minutes of the cash session. The first 30 minutes of the cash session just expired 3 minutes ago. And so what we'll do is we'll go out and I'm going to wait for price to break either below the lowest of that 30 minutes or the highest of that 30 minutes. And then we would look to, trade in the direction of the break. And then the target level would be the first marker here. Okay. So in essence, we're looking at something like this. I'm anticipating prices are going to move lower. So if we were to set up the trade, you'd be placing the stop loss here at about the 50% level. We'd be looking to take profit down here at this level. We could maybe even, squeeze a little bit more and target down here near the lows. But I'd like to wait for this candle to close outside of the range. A lot of times we'll get false breaks, but since I am anticipating a breakout lower, I may, go in here a little bit early. So this box here off to the right, what I've done is I basically, already got baked into this, the calculations that if I wanted to risk $300, if the point value is 100, then 32 would be the trade size that I would pop in here. So if we put 32 in here, if we're looking to sell, and again, this is not a signal service, I'm just sharing with you how I would go out and analyze these markets because the market has been behaving the way we've been anticipating. So the stop loss is going to be up here at the 50% mark. So that's going to be at 76.95, 72. And then the take profit level is going to be down here. I tell you what, I'm gonna come down a little bit lower than that 0.5, and I'm going to target down here at 76.74. Okay, so in essence, what we're doing is we're risking about 300 for that potential of a 400 profit, and it looks like we are. Well, let's see, the 5-minute candle just closed, so this is a brand new 5-minute candle. So let's see if we can come down here and punch this a little bit lower, and then we'll use that as our opportunity to trade in the direction. So again, bigger picture, if we can kind of catch this, I'll tell you what, I got about 3 or 4 minutes till this candle closes, but I don't want it to run away to the downside, so that's why I want to keep an eye on it. But if I zoom out a little bit, we're looking at this high. Off of this high, I'm looking for 5 waves lower, and I think this high here was a wave 4. So, this high that we saw just in the last 30 minutes, I think this is going to be a pretty good high. I think we're probably going to see this low break before we see this high break. So I would be surprised if this thing rallies up here and breaks up above the high before it breaks the low. That would be a surprise move, and I'd have to go back and reassess what the various patterns are that we're looking at. Something else may be brewing, and it's just not wanting to play ball with us today. But as you can see, it's about, when you come and target this level, and by the time you wait for a 5-minute candle to confirm on a breakout, it does end up yielding this particular strategy less than a 1-to-1 risk reward ratio. But because of the larger pattern that we're looking at and the deeper stop loss down here, this will get us, about a 1-to-1, slightly better than a 1-to-1 risk reward ratio, based on what's happening over here. So obviously this risk reward ratio that you're seeing here is shifting as the prices is moving. But I do not want to enter in quite yet, because because my stop loss is sitting right here at the 50% mark. So, prices could just rally up here, not even touch this low, just rally on up here towards this high. But this is good. It's coming back down here towards the low, so we'll see if it's able to reach down and touch and break through this low. So it looks like we got about another 2 minutes here till this 5-minute candle closes. So yeah, I like using the 5-minute. I suppose you could do a 2 or 3-minute candle if you wanted, just to to get it more time sensitive. Your breakout level, your range. So OR is opening range. So that's opening range high, opening range low. And then orb, opening range, breakout. So I mean, this type of strategy is as old as the hills. When you're taking the first few minutes of a particular session and trading a breakout of that range. So yeah, it looks like it's wanting to come down here. So I like this price action on this 5-minute candle. A little bit of a wick here to the upside. So we'll give this about another minute here and see if it's able to hold down here near these lows, and perhaps even break on down below the 7686. So yeah, if you have any questions, go ahead and pop those into the chat box. And also, if you like what you see here, I know we're only 8 minutes into the new live session, but if you like what you see here, go and give us a thumbs up and a follow, and we appreciate it. Also, while we're waiting here for a minute, got about another minute to go. Let me drop this out into the chat box as well. So basically, we're looking to expand, the sessions that we're doing here. So in addition to the like and the subscribe, go ahead and take the survey. Let us know what you thought about today's session. It is anonymous, so you don't have to. You can if you want, but you don't have to. But let us know if we're looking to expand the number of days per week, also the timing of it as well, get some other sessions going here. So yeah, just let us know what you thought about the show, and if you what you would like to see as far as an expansion, things to do different or different time zones. So yeah, that 5-minute candle just didn't work. So what I'm going to do now is I want to move on to other markets. This could still come down. So again, if this price, regardless of what it does here, dance, it could, I don't want it to break up there, but if it were to dance around a little bit higher, then come down and break the low, that would be fine. But what I want to do now is I want to go ahead and create an alert here to let us know. Why did that alert not show up? Let's try this again. There we go. Yeah, so if this alert hits while we're checking out some other markets, then we'll come back and check this out. So let me go ahead and let's move on over. We'll come back here to the U.S. equities, depending on what's going on. Let's go over and take a look at gold here in just a moment. Hey, Winter, glad to have you here with us on the show. No, there are some people that do watch the recordings and through some of the other channels. So, um, yeah. Hey, you know what? Failing an evaluation, I don't think they're the only people that have never failed an evaluation are people who have never taken an evaluation. Okay, so everybody fails, and unfortunately, that's that's what happens. Um, but there are some techniques that you can look at to help pass. I don't know anything about your style of trading, what markets you're looking at, but just at a high level, some things that I've noticed in talking with traders over the years is that a lot of times they're using trade sizes that are, too large relative to the amount of drawdown that the evaluation provides. And so, within 24, 48 hours, they're getting kicked out because of one bad trade. So part of it is, yeah, you're looking for increase, you're looking for growth in the account, but then the other part of it too is you got to manage it so that there's survivability, so that you can make it to the next day. Because sometimes the market's going to smack you, with a quick reversal or move you in the wrong direction. Okay, gold, perfect. Well, that was the next one wanted to look at here. Um, and so let's go ahead. Hey, Zoris. Let me zoom this out to a 4-hour chart. Gold has some important things to talk about. All right, and there's a lot of drawings on here. So I will try to unpack the important ones. I think, from an Elliott Wave perspective, that's what these drawings are. It basically helps frame the market for me. So what I'm looking at right now is I don't know if this high that we saw yesterday, it could be the end of a third wave. If, and we'll get to some important levels here, but from an Elliott Wave perspective, if it's the end of the third wave, so this was the idealized pattern we've been talking about. If we're at the end of the third wave, that means we're up here, okay? And then that means, tell you what, let me use a different, use this circle here. There we go. So that means we're up here. And if that's the case, that means we would go through a little bit of a fourth wave decline. And that fourth wave decline is probably going to come back down here and retest these lows. Now, I don't know for sure if this is what's going on. So there's Elliott Wave is deductive, which means that all the patterns that don't break the rules are possible. And so as an Elliottician, what I'm doing is I'm trying to determine which patterns are most likely going to happen. So there's always going to be a couple, 3 different patterns that are the preferred patterns that I'm following. Those are the higher probability patterns. So the 2 higher probability patterns that I'm following right now, oh, we hit the alert there on S&P 500. I'm just going to go back there real quick because I want to walk through a trade. If indeed we do break down below here. And so I got to reset this up, and then we'll go back to gold. So sorry for teasing you on that. Of course, it did not keep my levels. So the stop loss, 76.95. Target down here is 76.74. Oops. You can see all the manual entry situations that could come into play here. I originally had this as a buy when I really wanted to sell, all these different manual errors that could go on, and they do happen. I'm sure it's happened to y'all. It's happened to me, even with regularity. I'm going to go ahead and I'm going to jump into this right now. And then, so what I've done, the reason that I've set $300 as the risk amount is because within this particular account, so this is a $100,000 account, this one has like a $6,000 drawdown available to it. I have to double check the rules, but I think it was maybe 3,000 on the daily side of things. And so whatever the daily drawdown amount is, what I like to do is I like to take that daily drawdown, divide it into buckets of 10. And you could do buckets of 15 if you want to be a little more conservative, but divide it into buckets of 10. So with a $3,000 drawdown, divided by 10, that's 300. So in essence, what I'm saying is I only want to risk 300 on this particular trade. And by doing so, we're affording ourselves the ability to be wrong, but still be able to survive to the next day. And so, and if we are right, then we're banking in another 300. So we want to keep that risk steady. Now, what that's going to mean is that we're not going to pass the challenge in a week, right? That's not the goal. The goal is to pass the challenge. Whether it happens in 2 weeks or 4 weeks, does that really matter? That's really the question you got to look at yourself in the mirror on. Does that really matter? Or is it more important that I pass it? So the technique to help pass it, in my opinion, is to slow down the trade sizes so that you can survive. And because you might get kicked out of the evaluation, and then the next day, boom, a huge trend develops, based on your trade idea. And so you want to be able to be around to catch it. So so that's why I do the buckets of 10. Take your daily drawdown, divide it by 10, and then that's the trade size that you want to in my opinion, you want to allocate. So let's go back to gold. We'll let that one, kind of simmer here a little bit, and this fits very nicely into the larger pattern. I was expecting a retest of these lows, so a breakout to the downside fits nicely. Doesn't mean it's going to happen. It could come up here and it could tag the stop loss. We could get stopped out. So by no means are these guaranteed trades. You're going to be wrong. And, quite frankly, if you are using a 1-to-1 or 1-to-2 risk reward ratio, if you're wrong half the time, you're doing pretty good. Okay. So I think some of the newer traders to winter to keep in mind is that some newer traders think they need to be right like 2 out of 3 trades or 3 out of 4 trades. Actually, you don't. You can be wrong half the time and still grow the account as long as you're when you're winning, you're taking in more than when you're losing. So back here to gold, on that 4-hour chart. So the two patterns that I'm looking at, let me get rid of this arrow. That arrow was from Tuesday's stream. And boy, we got a lot of lines on here. These lines, each one of these lines had a meaning. Was so helpful. No, seriously. But the two main patterns that I'm looking at here are essentially that if this is there's 3 main patterns in no particular order. I guess the main order might be that that's a significant high up here, and that we may come down and retest these lows. Then it moves higher. So the longer term, medium term pattern is still incomplete to the upside. There's still more upside to be had, in my opinion. Okay. There might be a dip that comes down and revisits this cluster of lows. Now, when I say revisits, it might get close. It might only get here. It might overshoot it a little bit, okay? So it'll be somewhere in this zone. Let me move this over. So somewhere in this zone would be that where that cluster of support, it might find support. So that's one option. Option number two is that we get like a little bit of a decline. And what that would tell me is that this is not the end of wave three. Get a little bit of a decline, then it rallies up here into new highs. That would tell me that this wave is still ongoing. And then there's the other pattern, which just basically says maybe it just consolidates sideways and then basically pushes higher. Okay, so those are the three main patterns that I'm looking at. I think downside is going to be relatively limited to these previous lows, and that this pattern is incomplete to the upside. Here's the important thing that you need to walk away. The one thing with regards to gold that you need to walk away from this live stream, bake this into your mind. This is an important level that's probably going to be in play for the next week. Gold may struggle to rally much above the high that was saw yesterday. So when it rallied up to this high and stopped, there are some important levels up here. I don't have them all on this particular chart, but there's basically 4 different wave relationships plus this previous high back here. That are coming into play near the highs we saw yesterday. So you notice I got a little long trade. That after prices started rallying, I went ahead and jumped in long, and once it broke up above here, because that confirmed to me that this trend is still incomplete to the upside. Now there is a wall of wave relationships and resistance that are showing up in this upper green box. Let me change. Yeah, we'll just leave it at, or gray box. So it may struggle. Now again, does that struggle means that it pushes all the way down here, then rallies up to new highs? Does it just push down a little bit, then rallies up to new highs? This price action, this 4-hour candle where it wicked down and then popped right back up, to me, this is indicative of the strength that is still behind the gold market. The next trend in gold, the next, over the next several days, and when I'm looking at trends, I'm looking at the next like 2 to 5 days, couple of weeks. The trend over the next couple of weeks is still going to be to the upside. Dips, I think, are going to offer up value opportunities because I think this eventually is going to break. I think it's eventually going to break up above this wall. But like I said, I don't have them all listed here on this chart. I've got a couple different chart templates going on, but this is a 4 different wave relationships, plus you got this previous resistance back here. Now there's something else I want to share as well that comes into play. Now, you'll notice here, this is the CFD pricing. Prices came close, did not quite make it up into that gray box. Now, if we come over here and if we take a look at the futures market for gold, now futures pricing is slightly different. Okay, so you notice the price levels are a little bit different here on the side. The patterns are going to be very similar, but because there are times when the market is closed, some of the extreme valuations, they might not push as high, might not push as low. But if we look at the futures market on this, that gray box, look at this wall of resistance that comes into play. Oh, yep, we can just see right here, stop loss got triggered. So we had that fake lower, and then it ended up going back up and triggering the stop loss. But with only one of the 9 buckets deployed, or one of the 10 buckets deployed, it's a small loss in the account. So it's not going to ruin the account. Okay, but on this futures, we've got this wall of resistance, and price came up right to the bottom side of it. Okay, so I think eventually prices are going to work itself back up here and try to process through this. So it may probe it a couple of times. Gold may try to come in here, probe it a couple of times, but I think eventually it's going to plow through this, and I think it's going to work itself higher. The big question is how often, uh, how deep do the retracements go and how long does it take to process through it? If this slices through this gray box quickly, then I think that's going to tell us there's, it's off, much stronger upside levels are available. So once, see the top side of this on futures is at 46.30. And so I think you're talking, another upper 46s, probably another 40 or so gold points on the futures contract. We come back here to the CFD contract. Okay, the top side of this, get to the top of this wick here. Go. Top side of this is at about 4,600. And then, so yeah, you're looking at another 50 or so gold points up here to 46.50 would be the next level of resistance. So if it breaks through and processes this gray box, I think we get a pretty solid move for the next 40 to 50 gold points to the upside. So again, if there's one thing to take away out of the stream for today and to keep in mind over the course of the next week is that on gold there is this heavy wall of resistance, and it's going to and I think it's going to struggle. But that doesn't mean that the uptrend is over. Things just might be getting choppy in the markets, and it may chop around a little bit. Um, but eventually, I think it will process through the top side of this gray box. And once it does, I think there's, perhaps a quick 40 to 50 points on the other side, on the top side of this gray box. So I hope that makes sense. I want to be, really clear on, the way that I'm looking at this and trying to share that. Um, although gold may struggle, I don't think the uptrend is over. I think there is more to be had. Is this a good place to get into it? I mean, again, I like the price action of this wick. Prices came down, it wicked lower. Um, it's trying to work itself higher. This is a 4-hour candle. Let's see what the 1-hour looks like. Getting some good 1-hour candles here to the upside. This looks like a corrective move. So notice how you get kind of a straight line lower, sideways correction, straight line lower. All of this is taking place, or that consolidation within that move lower. Yeah, this looks like a triangle pattern here. So yeah, you have an equal wave right down here to this low. So this pattern, let me break this down into a 30-minute chart. This pattern, looks like an ABC decline. This would be a zigzag pattern. So A, B, C, okay. B would be a triangle pattern. So we have a triangle pattern right here. The top of the triangle, here's the bottom of the triangle. And then usually what happens within zigzags is your A and your C legs. So the C leg starts right here. Your A and your C legs tend to have equal distance or Fibonacci proportions to one another. So if I come out here, if I use my Fibonacci extension tool, measure the length of this A wave, project it here to the end of the B wave or the beginning of the C leg, it projects C coming down here, and look where it bottomed out at. Let me get this arrow out of the way. It bottomed right at this green line. So this is an ABC decline. This means that the potential is strong that we're going to come up here and retest this high. It may not do it in a straight line like this, so I do like this to the upside. I've already got a little bit of a trade size in here. So if I were looking at this, if I were going to add to it, let's just use kind of current price levels. You'd want to place a risk down below this low. It's already about halfway there. But I would look to take profit, maybe just up above this high. I probably want to get out of it before you get into this, gray box. It's possible that prices may, use this rally to continue to work through that gray box. But like I said, it's a very, very strong wall of resistance. And so if it slices through that gray box immediately, then that tells there is a ton of underlying strength. But if it were to struggle with that gray box, that's okay. That's just how strong that wall is. Just to let you know, like I said, there was 4 different wave relationships from an Elliott wave perspective, and then you've got previous swing highs going back several months to the left on the chart. Uh, it's it's not very often, it's rare to see that with an Elliott wave where you get a lot of things lining together like that. And so it is a pretty strong wall. But you know what? You got about a 1-to-1 risk reward ratio here. So this is okay. It's not glorious. What's glorious about it is the fact that this is a very clean downside pattern. So it does indicate that that there's a high probability we're coming up here to retest the high. The problem is that even with a very clean pattern, like it just means at some point in time we're going to retest this high. We could get something like this, then it comes up and retests the high. So that's really the risk that we're playing against. And so that's why you want to, if you risk something, you want to risk, you know, whatever your drawdown bucket is, you want to give yourself, divide it by 10, use that. I could see this being an okay possibility to the upside of tagging this high, just based off of the current prices while we hold up above here. So like I said, I've already got one in here. That's why I'm not, jumping at the bit to run and make it happen. A little bit of resistance that it may struggle here. So perhaps if we get a little bit of a downdraft, we get a little bit of a move down, um, that may offer a launching pad to the upside. And if we get a downdraft like that, basically what it would do is it would allow me, to perhaps move, because the risk level would stay the same just below this low. The take profit would be up here, but if we move it down a little bit, notice that we move from a 1-to-1 risk reward ratio, almost a 1-to-2 risk reward ratio. So I'm going to set an alert down here at slightly lower levels just because it may run into this resistance and it may suppress a little bit. Doesn't have to, but we may use that as an opportunity. Just set that down there, and if we get triggered, we'll check it out. But yeah, I think we're looking higher here on gold. All right, let's come over here, take a silver. Notice the difference between gold and silver. Gold was struggling to match its highs from yesterday. Silver is pushing up above it. So silver's price action is indicating, that gold, is probably going to want to push into higher levels. So I like the price action here on silver as well. Just want to measure something out real quick. Price on this little decline came down to about the 38% retracement. So that's real nice. There are some wave relationships showing up here in silver just below 70. I want to say it's like 69.5. So let's zoom out, look at the larger pattern. Birds of a feather flock together. So if silver's cranking higher, chances are it may lift and pull gold higher as well. But yeah, so what I'm looking at here on silver, this is a bullish chart. Okay. And so I'm going to move this over. I want to make sure we look at this idealized pattern. So we're looking at a bullish impulse pattern. So this would be a larger 5-wave rally. And so here's wave 1, here's wave 2. This is 1 and 2. So we're in the middle of a 3rd wave. So I think that we are looking at, we're probably about where this marker says is probably about where we're at. in the middle of a third wave. And if we are in the middle of a third wave, then that means this thing, we may continue to see strong moves like this. There's another pattern, like you see here, this alt. This is an alternative. It says that maybe this high up here was the top of wave 4. You don't have to know Elliott wave to understand what I'm talking about. So let me just, kind of map this out for you just with the same labels that I've got here on the left, but to show you what the idealized pattern looks like. Okay, so this is the idealized pattern on the right. Here's the actual pattern on the left. So here's your 1, here's your 2. Okay, the alternate, so best case scenario, we're in the middle of a wave 3. This thing would just be pumping hard to the upside. And we've seen over the last 24 hours a hard pump to the upside. So when you see situations like this, you just kind of get out of the way. Like if you're in the long trade, get out of the way, let it go. Just let it keep going, because it is hard to predict where the tops of these strong moves may develop. But there is an alternate that says this is the top of wave 4. This may be the top of wave 3. This may be the end of wave 4. And if that's the case, then we may be, progressing higher, I guess, because we're above the top of wave 3, you may be progressing higher in a wave 5. Okay. So we're either in the middle of a third wave or we're in the middle of this fifth wave. Now the fifth wave is an ending wave, and it would still have a couple of more jabs higher. So I like gold, but I love silver to the upside here. Letting this thing just continue to roll. I think up near 70 would be a relatively easy target in my opinion. Now it doesn't mean it's going to happen just because I say it's an easy target, but this is a pattern and a trend that I would want to be involved with. So I think we hit 70. I think what's going to happen is that, we get some more of a rally. We get a little bit of a dip. This dip needs to hold above the highs that we saw here. So when you think about this from a risk perspective, as we start getting up here close to 70, at that point, prices should be holding above the highs here. And then from there, we get another rally higher. So we still got a couple more, in my opinion, strong moves higher. And dips are probably going to be temporary. Let's do a little landscaping here. So this is either the end of a smaller degree third wave, or this will be the end of or the end of the fifth wave down here. But either way, both of those patterns call for some strong continued moves higher. So I like silver to the upside. If I were going to, this low should be a good low. There is a pattern. There is a pattern where, it may come down here, retest this low, then take off. See, where do we get out of the woods on that pattern? Yeah, so what I'm doing here, so I'm a guy, it's hard to talk and chew gum at the same time, right? Hard to do two things at once, but this very faint purple line, which is at basically 68. So up near 68. Now it's not, although the line on here is at an exact price, it's more of a price zone. So around 68 is where there is a pattern. It is lower probability, but there is a pattern that may drop it back down here to this low. And then it may take off higher. So it may be like a fake break higher, fake break lower, and then boof off to the upside. So again, I would look at this as at least a 2-trade situation. If we were to go long now and place a stop loss below this low, if prices did come down here and tag the stop loss, well, all that's doing is letting me know that, hey, the next move is probably still higher, and then I'm going to look for another opportunity to get in long. I don't have a problem looking at this as a two trade situation. So I'm going to walk through another situation here, another trading opportunity that I see based on this. Again, it's just walking you through how to determine how to figure out what trade size is appropriate for the account size. So in this case, and I've already got a little bit of exposure in on this account. So when I'm adding to it, I want to add in much less than what's already out there. Because if I added in a same size as this or larger, then all it's going to take is just a little bit of a blip lower, and then boom, I've just blown through the account, blown through the drawdown. Um, so what I'm looking at here, so we'll just call it at market on stop, and then to figure out what trade size, always start off with the smallest one, so 0.01. Set the stop loss in. So I'm going to go a little bit below this low. This low is at 65.61. So I'm going to go a little bit below this black line, which is the 38% retracement level. So that's at 65.45. So I'm just going to call it 65.40. Okay. And so at 65.40, it's $116. So again, if I were going to risk 300 on this bucket, if I go to 3, it's 350. It's too much. So really, this would be a 0.01 or a 0.02 trade size. All right. So I'm going to go at 0.01 because I've already got some exposure out here in this market. And then I'm going to leave the take profit open because there could be significant upside available here, and I don't want to limit myself just yet. As this pattern develops, like if we do get up here and if it follows this top black line, let me get rid of this one. If it does follow this top black line, it kind of depends where that is. You know, if it's just up here, the stop, the take profit level would be different than if it's, you know, like way up here. Okay. So I want to kind of see where this top portion of the next wave kind of terminates at. And at that point, I'll be able to determine where the target level is. But the higher this thing gets up here for silver, then what I would do is I would move that stop loss up here to just below this swing high. So we'll go ahead and we'll put that out there into the market. Huh. Must be some type of setting. Plenty of margin in the account, so I know that's not the issue. Anyway, that's how you would walk through it. Gold, silver. We'll come back on platinum. I think platinum, you know, is a very interesting market too. I know a lot of people don't trade it. Probably never even heard of it or followed it. But I really like platinum to the upside as well. Let's go back. Let's take a look here. Let's see what happened on SP 500. Let's boil this down to a 15-minute chart. Yeah, so we just kind of got that fake break lower and then went up and tagged that midpoint of the range. Yeah, so it happens. So it looks like it may try to surprise me and hit the top half of the range. I would not take the breakout on the top half. I would not take the breakout on the top half. This is the key level here that I'm looking at, this low right here. Let's go back out to the 1-hour chart so things kind of get, yeah, so this low is 77.11. I think prices hold below 77.11 to top in a wave 4, and then that gives us one more push lower in a 5th wave. If it breaks up above 77.11, there's a couple other patterns at play, and it just gets messy. So the clear trade. So when I think of trading opportunities, and I mentioned this, you know, I'm thinking about you, Winter, being a newer trader. when I was first making my first trades, all I could think about was how to be right. How do I get that winning trade, right? Because your account doesn't grow until you have winning trades. And so as a newer trader, I was constantly thinking about how do I get winning trades? I got to win, got to win, got to win. It's like, playing basketball, baseball, whatever sport. You're always strategizing on how to win. And to a degree, trading is no different from that. But there is also that risk mitigation. So to me, a good trading opportunity is one where I have clearly defined pattern, where I know where I'm wrong and I know when I'm right. And if that can be clearly defined within the patterns, to me, that's a grade A opportunity because I know exactly how to set my stop loss. I know where to enter. I know where I can take profit at. So what I'm saying here with the S&P 500 is as long as S&P is below 7711, this is a grade, probably a B plus. Okay. It has a very clear defined level, 7711, that as long as I'm below 7711, the potential to retest this low is elevated. It's not 100%, but I'd say it's a good chance. The moment we touch above 7711, that doesn't mean that there's zero chance of hitting this low. It just means that there's a multitude of patterns that are available, and it's hard for me to discern which one of those patterns is the pattern at play. And if I don't know what pattern is at play, then figuring out where to place stop loss and the risk level becomes much harder, and it's just a tougher trade. So yeah, as long as we're below 7711 on S&P 500, I think the potential to retest this low down here is elevated. Let's peek on over here at Nasdaq. So again, Nasdaq, this black arrow is from Tuesday's streams. That hey, we're coming down here. I just don't know at that point. If you could look at the recording, I was doing the same thing. I don't know how low this is going to go. Maybe it just dips down a little bit, but eventually there's going to be a little bit of a retracement higher, and then we're going to get another move lower that pushes down towards this green box. We have not reached the green box yet. Does it have to reach the green box? No, it does not, but that's the higher probability zone. That means if this pattern were to appear, let's say 100 times, maybe 80 of those 100 times, it reaches down into this green box. So it doesn't have to, but the chances are that that's eventually where it goes. And so where are we looking at now? Well, I think because of this quick spike higher and then prices just kept reverting lower, this could be the wave B high here. And that is trying to work itself lower on wave C. So I would say the key level for this is going to be this cluster of highs. That as long as we're below this gray box, this cluster, NASDAQ is at risk of further losses, coming down deeper here into the green box. If it pushes up above this gray box, then I've got two decisions to make as an Elliottian. Was this the end of the move? Was it something like this? And it's just A, B, C. C is very, very short compared to A, so that doesn't look very good. Or is my B wave still ongoing? And if it pushes above this gray box, maybe it comes up in here, something like this, and then we get another jolt lower. So, like I said, I don't know the path that it's going to get down to this green box, but this green box is a higher probability zone. And the fact that we haven't hit it yet means that the risk is still to the downside, and we're just trying to pinpoint those areas on the chart where we could maybe jump into this and look for this to the downside. I would say, this gray box is a key level, at least for now. Above the gray box, I'd probably consider the B wave still in movement, still ongoing. Oil, let's take a look at oil. Oh man, check out check out our recordings from last week. Ever since probably a week ago Tuesday, a week ago Thursday, sometime last week, in that live stream, I drew this gray box and was like, look, I think we're getting a partial retracement lower. And then eventually we're going to hit this gray box and push through it to the upside and close this gap. It's exactly what's happened over these last couple of days. And so, this price action that we see here on oil, I think it could be something similar like this for gold, right? Where it comes up, it probes this gray box, struggles, and then it gives us a quick burst higher. I think gold will probably do something like this, but for for oil, I was saying, hey, 90, maybe even $100 a barrel. I think we're looking to the upside. There is a trend line up here near 90, so I still think it has a ways to go to the upside. I don't think we're at a wave relationship here. Let's see. Put a 618 out here. Yeah, went a little bit above the 618, so I think this is going to open the door. I think it has an open door up here to about 90. I think we're looking at something like this. 1, 2. This might even, whoops. So this, I'd probably put 2 there. Smaller 1, 2. So probably looking at something. We're looking at something like this. In essence, we're looking for this wave 3 to clock off in 5 waves. And, again, third waves tend to be strong. And so, this would be a third wave. And notice how strong this thing was. So I think it's got another jolt higher here to finish up this micro wave 3. It doesn't have to go all the way up there. It's just kind of an ideal, it could just go right here even. But I think we get a retest of this high on micro wave 3. And basically it needs to hold up above the gray box. As long as prices hold above the gray box, you're looking at a retest of this high. So even if we were to zoom in on this, consider this near current levels, and put the stop loss at the top end of the gray box, and then if we were to target this high, about a 1 to 136, okay, a little bit better than a 1-to-1 risk reward ratio. But I think the next move here is we get a retest of this high. Now it could go up here farther, doesn't have to stop, but just a retest to this high. Okay, and then that would finish off our third wave. Then we get a little bit of a fourth wave correction. This fourth wave correction may draw us back down towards this gray box. Fourth wave correction, then a fifth wave up here to these highs. So oil looking constructive to the upside. Also checking out, let's look at currencies, and then if we have time, we can go back to platinum. So for dollar CAD, we've been tracking this one to the downside here for a few days. This might look better on a 4-hour chart. A little bit longer trend, okay? So from the high, wave 1 lower, wave 2 higher, this whole entire move is a third wave, okay? So I'm going to adjust this a little bit. I think we're bottoming here in a wave 3. Okay? After a wave 3, then we're looking for a wave 4 rally. A wave 4 rally is probably going to carry us back up here at about 38.60. Is the bottom of wave 3 in? We're getting close. We're getting close. You'll notice these two horizontal lines down here. These are wave relationships. So this is similar to gold, where I was talking about there's a wall of wave relationships. There was 4 different wave relationships appearing in gold. Well, here's 2. Okay, this is common to see 2 wave relationships overlapping, near one another. In gold, there was 4. Plus, there was previous horizontal resistance in at gold. If we look here on silver, I'm sorry, this is not silver. This is CAD. If I just mark this off, I just move it here to the left, you got this little bitty support zone back here. Okay, so CAD is nearing the end of a third wave. Let's zoom into the 1-hour chart. Let's see how close it is to the end of a third wave. Okay, so what I'm doing is I'm counting the number of waves lower. So from here, 1, 2, 3, 4, 5, 6, 7. Okay, so because this is 7 waves down here, this tells me that it's incomplete. We're probably going to get a retest of this low. Now, how high will this go before we get that retest, right? It could come up here. It could even come up here, and then we get the retest of the low. Or it could just go straight down from here, retest the low, okay? But according to this count, it looks like we may get a retest of this low, and that would fit in with this wall of support that's sitting down here. So what I'm going to do is I'm going to incorporate the take profit level, and I'm going to put it down here at this low, because once this low is in place, it's going to be a stiff rally back up here, and I would be happy getting out of this trade on the retest of this low. So I'd move it down there. If we come down, if we retest it, and notice I did not put the take profit level down here. I could have, but the reason I didn't is because I'm looking to simply extract a portion of the trends. I don't need every pip of the trade or every pip of the trend. I just want to extract a portion of it. And as a matter of fact, we've already extracted some of it. This trade size I initiated back here was a 0.4 trade size. We took 0.3 of it off right here. So this was most of the profit on the trade, anticipating a little bit of a bounce. I was anticipating a little bit larger bounce that did not develop, and then it took off here to finish off wave 3. So I'll be happy getting out at this point. Another way you could do it is you could just manually trail the stop loss. But on this subsequent rally, it's probably going to rally back up here, into the mid to high 38s. And then at that point, we'd look to reestablish a short position and do one more trade lower in a 5th wave. And so that 5th wave, is probably looking at, let's see, that's the end of microwave 5. So 42.5. It's about 250 pips. So if prices come up here, 250, that would take us down to like low 36s. So eventually I think we're looking at low 36s and, about 250 pips or so. But that's a couple of steps above where we are right now. Right now, I'm just looking for one more, I'd be happy getting out of the trade, with one more retest of that low. I think a bottom may develop, doesn't have to. This could continue to extend the lower. All right, you know what? I'd miss out on the rest of it. That's fine, because the odds are elevating that a low is approaching. The other thing I want to do too on this, just because I don't need somebody to tweet something out, or something happen in the markets that really changes the nature of it, and what was a little bit of a winning trade turns into a losing trade. what I'm going to do is I'm going to set this stop loss just above the low of this wick right here. Now it's possible, like I said, prices could come down here, retrace a portion of this and continue to work itself lower. But at this point, I want to make sure I still lock in something, and I don't want this winning trade to turn into a losing trade where I lose something on it. So basically, I'm just risking another, $70 here to try to squeeze out the last little bit. So, yeah, let's take a look at platinum. I do want to start talking a little bit more about platinum. The spreads are not quite as tight as what you're looking at on, something like gold or silver. But this pattern, notice how we have consolidation, rally, strong rally, consolidation, strong rally. Okay, this is a developing uptrend, and this uptrend does not appear to be complete. I think that from the low here, I think this is the beginning of another 5-wave structure to the upside. So if we zoom this down to a 1-hour chart, we get 1, 2, 3, 4. We're rallying higher in a 5th wave. I think that just becomes a larger wave 1. So I think we're just looking at something like this. We get like a 1, 2, 3, 4, 5. So over time, I would not be surprised, and this fits in line with what I'm looking at for gold and silver. I would not be surprised to see platinum trade back up above 2,000. Okay, and the low that we saw yesterday, this low right here, prices are probably going to comfortably hold up above this low. Now, once we get done with this wave 1, the correction could be a little stiff, right? We may get something back down here that retests this, zone of highs. Broken support acts like new resistance. We've already retested it here, so it just may simply be, more upside to be had. So that could happen. But I think just generally speaking, higher prices I think are coming, or gold, silver, platinum. Dips I think are going to offer up opportunities to load in, buy into this trend to the upside. So, well, that's all the time that we have here for today. I do want to thank you all for joining us, and we'll be back here next Tuesday. So again, if you like what you see here, go ahead and give us a like, a thumbs up, and we will talk to you next Tuesday. Have a great weekend. Bye now.